Hello there. The Bank of England welcomes the UK Chancellor of the Exchequer's alleged plan to end the bonus cap in the City of London. But not only trade unions sharply criticise this project. The alleged plan of the new British Chancellor of the Exchequer or Finance Minister Kwasi Kwarteng to abolish the bonus cap for bankers in the City of London has reignited the dispute over fair and at the same time economically efficient remuneration in the financial sector. While American investment banks in particular unofficially welcomed the project and were supported by the Bank of England, trade unions and the opposition Labour Party criticized the plans as redistribution in favor of higher earners. According to reports in the British media, Kwarteng wants to lift the upper limit for bank bonuses introduced by the EU after the 2008 financial crisis. You might have seen my video on that. According to the EU rule that has been in force since 2014, bonuses in cash and shares may not be higher than twice the annual salary. Brussels wants to limit excessive risks and strengthen financial stability. The British Treasury did not want to confirm the plans for abolition. The Chancellor of the Exchequer will present an emergency budget for the fight against the energy crisis next Friday and could also address the bonus debate. Great Britain's new Prime Minister Liz Truss recently defended the disproportionate tax relief for higher earners, arguing that they also paid more taxes. Truss and Kwarteng have announced plans to boost Britain's chronically weak economic growth. The British economy stagnated in the second quarter of the current year. From the abolition of the bonus rules from the time of EU membership, Kwarteng apparently expects a Big Bang 2.0, which should strengthen the competitiveness of the London financial centre and thus unleash new growth forces. But it will have impact on how they are allowed to work in the rest of Europe. Former British Prime Minister Margaret Thatcher launched a similar wave of deregulation in 1986. At the same time, the new finance minister allegedly wants his plan to thwart efforts by the EU to lure more bankers from the City of London to European financial centres in Frankfurt, Paris or Amsterdam. But they might have to go there then if they can't. It's disputed among economists whether abolishing the bonus cap would have the desired effect. It's a pretty confusing signal when people are being crushed by the sharp rise in the cost of living and the government is encouraging wage restraint, said former British central banker Andrew Sentence. The timing would be very bad, he said. And opposition leader Keir Starmer accused Kwarteng of raises for bankers and cuts for nurses. The reaction in the city was completely different. It's a welcome move that aims to improve the City of London's competitiveness against other global centres like New York. That's what Gerard Lyons, chief economist strategist at online wealth manager NetWealth, told Bloomberg. Competing financial centres expect further deregulation in London. Frustration about the consequences of Brexit and the loss of importance in politics runs deep in the city. In addition, the negative effects are far from over. Removing the bonus cap would be a fast-acting therapeutic measure that should initiate the start of further measures, says Hubertus Veit, managing director of Frankfurt Main Finance. The Bank of England also got involved in the heated political debate at an unusually early stage. The bank did not support the bonus cap when it was introduced. The regulation for senior executives and the remuneration rules, which require the deferral of bonus payments, are more effective tools to ensure that bankers take appropriate account of the risks, said a spokesman for the central bank. Andrew Bailey, governor of the Bank of England, had also been critical of the bonus cap in the past, but warned the government not to jeopardize financial stability with a wave of deregulation in the city. The bonus cap is also controversial because many major British banks have now found ways to circumvent it. For example, HSBC and Lloyds simply increased their managers' fixed salary components. The US bank JP Morgan also boosted the salary of its London-based president Daniel Pinto last year with a lump sum payment of $8.5 million. If the bonus cap in the City of London were to be dropped, the US banks could save themselves these detours and standardize the salary structure for their bankers again. EU banks such as BNP Paribas or Deutsche Bank could find themselves in a quandary if the bonus cap were abolished in London. They would continue to be subject to the bonus cap and would have to pay their bankers higher fixed salaries to keep them on track. And one point they always forget is if they deregulate too far, the access to the European market will be even much more harder for London banks than it is now. And I'll see you in my next video. I'll be back.